Have you ever walked past a local laundromat and wondered, is that actually a good business? Well, today, we're going to find out. We are tearing down the financials of a real-world business plan to see if it's a solid investment, a true money spinner, or just a money pit.
Okay, let's get right down to it. For any investor, the first and most important question is always the same. What's the price of admission? How much cash do you actually need to get the doors open and those machines spinning? And there it is, the big number, just over 51,000 euros. That's a pretty serious chunk of change to get started. So, the big question is, what are you actually buying for that 51 grand? Let's break it down.
All right, so let's deconstruct that initial investment. Where does that 51,000 euros really go? This is the first step in figuring out the real financial risk.
Okay, so you can see it's broken down into three main buckets. You've got your legal fees and your initial marketing, pretty small potatoes, relatively speaking. But whoa, look at that middle number. Over 47,000 euros just for establishment costs. That is clearly where the bulk of the money is going.
And this chart just drives that point home, doesn't it? A whopping 93%, almost all of your startup cash is sunk into the physical stuff. We're talking renovations, plumbing, and of course those big, expensive washers and dryers. This is a capital-intensive business, that's for sure.
Okay, so we know what it costs to open the doors. Now for the fun part. How is this 51,000 euro investment supposed to make money? Let's talk revenue. You know, when you boil it all down, any business is just this constant tug of war, right? You've got the cash coming in from customers, and you've got the cash going out to pay the bills. The whole game is just to make sure the in is bigger than the out.
Now, this business plan is banking on some pretty serious volume from day one. I mean, look at this. The workhorse machine, the 11-kilo wash, is projected to be used over 7,000 times in the first year. That's about 20 washes every single day. So right away, you can see the entire plan hinges on hitting these really high-volume targets.
And this is super interesting because it really shows you the strategy here. It's a volume game, plain and simple. The smallest and probably cheapest wash is expected to bring in the most cash, almost 30,000 euros. They're not betting on big, high-margin sales. They're betting on a ton of small, everyday transactions.
You add all those little transactions up, and this is the goal. The total projected revenue for the first year of operation is over 88,500 euros. That's the top-line number this business has got to hit. All right, a revenue target of over 88 grand sounds great. But how much of that do you actually get to keep? Let's flip the coin again and talk about the expenses, the cost of just keeping the lights on. And no real surprises here, right? The three biggest money pits are the absolute essentials. You've got to pay your people. You've got to keep the water running and the lights on, and you've got to pay the rent. These are those relentless, recurring costs that just keep coming, month after month. And here's the kicker. A lot of these are fixed costs. It means whether one person walks through that door or 100 people do, you're still paying the rent. You're still paying that salary. That puts a ton of pressure on you to get customers in from the moment you open.
So that leads us to the ultimate question, or I guess in this case, the 51,000 euro question. After all those costs, when do you actually start making money? When do you cross that line from burning cash to actually turning a profit?
Let's dig into that. We're talking about the break-even point. This is the magic number where the business officially goes from being in the red to being in the black.
Okay, so the study crunched the numbers. It says you need to pull in over 65,000 euros in sales just to cover your costs. But think about it this way. That's over 13,000 individual washes or dries. That breaks down to about 35 services every single day, 365 days a year, just to not lose money. Wow. Okay, we've seen the startup costs, the revenue goals, the expenses, and the break-even point. Now for the number every investor really cares about, the bottom line. What's the actual projected profit?
And here we go, the moment of truth. The business plan projects a net profit of over 12,000 euros in year one. Now, on an initial investment of 51,000, that's a return of nearly 24%. I mean, if these numbers are real, that's a fantastic result. And from there, it's projected to grow steadily, hitting over 18,000 in profit by year three.
So the study itself is, unsurprisingly, very optimistic. It basically says, hey, this is a growth industry, people want convenience, this is a solid bet. But you and I both know that projections on paper are one thing, real-world risk is something else entirely.
So if we put on our investor hat and look at this with a critical eye, a few risks just jump right out. First, that high €51,000 price tag. Second, the whole business lives or dies on hitting those ambitious sales numbers every day. Third, you're not the only game in town. Competition is fierce. And finally, this model really depends on customers like students and tourists, whose demand can be super unpredictable.
So there you have it, the full financial teardown. You've got a pretty attractive 24% projected return, but it's all riding on achieving high volume from day one in a crowded market. The numbers are on the table, so I'll leave you with the final question. Looking at all this, would you invest?